I went hog wild with puts. Got a 220% profit on those. I'm out. Spider, enormous bearish engulfing pattern. We are still above support. That support's defined by that gap. It would be peachy keen if we cut through that tomorrow. I'm not counting on it, but as I just said, my puts don't expire at the earliest until September 20. So I've got lots of time for them to sort of wake up and smell the cat food that this market is about 500% overvalued. So that'd be cool. But at the moment, an enormous bearish engulfing pattern. The last time I saw one like this was back here, which, the very next day was up. It undid about half that, but it started something kind of nice for a couple of weeks. The belle of the ball, of course, is Nvidia. On the one hand, Nvidia has never been worth more. It's about almost $202.5 trillion market cap. Everybody loves Nvidia. A lot of people have made a lot of money on Nvidia. However, this is at the moment a big old shooting star pattern. If tomorrow the high is lower than today's low, that'll be interesting. I had no position in Nvidia. In fact, I was so scared of Nvidia, I got out of anything that smelled anything like semiconductor, like for example, on Semiconductor. Turns out to be a good trade after all, but I just didn't want anything to do with semiconductors. I did plunge right back in to AMD early today to very good effect. But yeah, Nvidia's like, because some people were tweeting me, hey, are you into Nvidia? No, that's like kryptonite to a bear. No, thank you. Speak of the devil, there's on, down 6.11%. Huge bearish engulfing pattern on that. Like I said, I got scared of that. I scurried away. It would have been just a dandy trade. The stock's doing as God intended. Intel, I must remind you, the recipient of tens of billions of dollars of free government money of the CHIPS Act, which is a ridiculous government welfare program. Intel still can't get out of its own way. It's a fallen angel. Intel hasn't been an important company since August 2000. That's when it peaked. It has been floundering around ever since. It is vastly lower now than it was almost a quarter century ago. That sucks because, last time I checked, there's a lot of high-tech stuff that's happened in the past 25 years. So Intel might as well just hang it up. SMCI. This one matched its peak from the 16th. Aren't I more fun when the market's down? When we're reaching new highs every day, I keep a straight face and I try to do a good job and so forth. But this is, give me a market like this every day for the next couple of years and we're gonna have a ball together, honestly. SMCI down, reversing hard away from that. This peaked at 972. How close did that get? 971.02. Yeah, so just a teeny bit lower than the peak on the 16th, but we're reversing hard away from that. The general idea, and the reason I had my feeling last night is because Nvidia only gets to report once. You don't get this every day. The bulls got their thing. The bulls, they get all the government help, they get all the interference, they get all the plunge protection team. Bears don't get nothing, except their own brains to work with. That's it. So, the bulls have this just showered upon them all the time, and then they get this Nvidia thing, dropped from the sky. But there's only one. It's going to be 3 months before there's another. And there will come a day. There will come a day. It may not be for 3 months, it may not be for 3 years, but there will come a day when Nvidia peaks. It might be today. As with Intel, we'll look back 25 years ago and say, goodness gracious me, I can't believe anybody cared about that niche graphics card maker. Ha ha ha. But it may have thousands of percent to go. I don't know. As of the here and now, the anticipation of what Nvidia would do is what excited people into this mad frenzy and got the VIX down to 11 and got every index up to record highs. So that's why I thought, all right, this could be the last spasm. So I'm going to take advantage of this absurdly low volatility premium zero. You can buy time for nothing. So thank you. Diamonds, DIA. Bull markets don't look like this, all right? This peaked 4 days ago. It slipped below its prior high. It's falling hard now, about 600 points or something. Yeah, this is not what the beginning of a bull market looks like. And another thing, this feeling that was experienced for Nvidia, whoever wins the presidential election in early November, and I've got a strong idea who it's going to be, but whoever that is, there will be ecstasy amongst that person's fans and followers and disciples. Ecstasy. Oh boy, are things going to be great. This is fantastic. Boy, oh boy, oh boy, oh boy, oh boy. If you could short that feeling, just buy puts on it, short it, do whatever you can, because it'll be all downhill from there. This was the election, the whole Nvidia earnings thing. XLI, another industrial wiping on the past 10 days of gains or so, big reversal there. IWM in particular, I felt that the small caps would have quite a weak day, and they were the first to head lower. It took just a few minutes for them to turn red. And so these are down about almost 2%. EEM, the emerging markets, beautiful gap play here. The gap itself at that dashed red line, 43.49. Today's peak, 43.47, 2 cents. Bearish engulfing pattern on that one as well. In China, which makes our markets look honest, falling hard over 2%. So at some point when they get hit real hard, there'll be more debt thrown at it, more government help to try to prop up some simulacrum of prosperity. Gold down $53. Basically all assets are lined up, 1.0 correlation. If gold's up, Bitcoin will be up, and Nvidia will be up, and kitty litter will be up, and all the rest of it, and vice versa. I noticed that there's all this chatter about Ethereum ETFs coming out. The government's banning its own digital currency. Isn't that wonderful? Ironically, that's all been built into the price. So Bitcoin didn't even get close to its recent high, 74,000. It's falling thousands of dollars. Gold down, Bitcoin down, stocks down. So the only thing that's still green is Nvidia, and good, because if Nvidia falls tomorrow, then you'll feel some real butter in the frying pan. Another funny thing is don't always trust the after hours data. And I'm not just talking about MarketWatch, whose data it's often just plain wrong. I'm talking about the truth, the honest truth. Because like last night, ELF was getting clobbered and Snowflake was soaring. And today, the exact opposite. So you can imagine the disappointment of those who are positioned correctly for either of those outcomes last night, because they were like, oh boy, oh boy, oh boy. And then the market opens like, wait a second, the color's wrong. So like ELF is doing great. They were about 16%. After hours last night, they were just a wreck. And Snowflake down 6.5%. Look at the size of that bearish engulfing pattern there, just a wipeout. And again, it was a superstar last night. Lulu, one of you brought to my attention earlier this morning. I'd kind of stopped tracking them, but Lulu is falling quite hard from about 5 to, so less what half its value this year, which takes some doing. This market is so propped up. To lose half your value, that is extraordinary, but Lulu has found a way. My own short positions, and it is a good feeling to be completely short, have no buying power left, and top day in history, and still every position be profitable. Some of them 25, 30%. And these are pretty conservative positions, like I said, September, October, January expirations. But quickly, AMD, just got into this one this morning. A lot of bearish engulfing patterns on these. Comerica, CMA, look at that. Down it goes. New position as of this morning, falling almost 7% away from that wonderful blue trend line you see. Caesars Entertainment got into this one a couple of days ago, down hard, 5.25%, falling away from that very nice head and shoulders pattern. Dollar Tree, long time hold, pretty stable now, 0.16%. This one, as I say, plenty of time left on Dollar Tree. IBM got into this one also this morning. Strictly speaking, the fail safe on this is 179.62. That is the gap. Above that, the pattern is just plain wrong. I'm going to be much more conservative. I've simply anchored this to today's high, and we pretty much opened at the high and are trading at the low right now, which is just what I want to see. So IBM down about 1.5% below that very nice gap. Next era, finally, utilities are turning around after a just grueling multi-month rally, down almost 2%, which is pretty big for a utility. Royal Caribbean falling just a little, 1.14%, very, very lofty, and I do think the damage to this channel is indicative of my target's way down here, down at 115. That's a long drop. And then finally, SL Green, symbol SLG, down over 2.5%, falling below that sort of kind of right triangle pattern, if you'll cut me a break and allow me to call it that pattern. So SMH is still up because its biggest component is very up. But as you can see, it pretty much opened at the high. It is pretty much trading at the low. And we're going to just anchor that to 237.22 as the price gap. It gets below that, then things get a little more interesting. I'd also point out, adjunct to all this, bonds are down again, TLT. We've reversed away from yesterday's gains. pretty much at the lows of the past week. As I mentioned, XLU is at long last has respected that dashed line there. That's the midline to this multi-decade channel. Got right up to it, and that's starting to do a slip slide in a way.